Okay, so this is your second series of videos. Now, I still don't know how many videos I'm going to make. I still don't know if it's going to be a 4-part series or a 3-part series. I just know that I want to get out as many of these positive points and important points as possible in order for you to be able to start your trading journey. Now, in this series of videos, we're going to worry about the most important thing, which is, well, not the most important, but one of the most important, because there's two aspects to trading. There's the technical applied side, and then there's the psychological side. Experience is something that people don't want to sell you or talk about because it hurts them. I need you to listen to this part. You will never, ever become or even have a chance, because we can't guarantee anything in this world. You can't even have a chance at being profitable. Profitable doesn't mean making money once. Any bum out there can throw a couple of trades, they get lucky, market gives them money. It's the keeping it part that's a problem. It's the let me do this again part. It's the let me take out these couple of $1,000 from this account and try to get it back to where it was slowly but surely. It's that part that everyone struggles with. See, most people out there just want to sell you the dream of easy money, pressing buttons, making money. That's not the game, okay? Now, is this game, is this realm that you're about to enter something that can make you money? Yeah. Go to my Instagram and go look at those testimonials. Now, you'll notice something. Sometimes you're going to see the same icons or same little faces pop up because these people, they are not getting lucky. They are now profitable traders. I just posted someone that in March and April made over $40,000 in the market during the coronavirus. He made over 40 grand in the market, and yesterday I posted him again, and he made 6 grand yesterday. He has wins all the time. He's a profitable trader, and I am one of the reasons that he has achieved that. And you need to pay attention to that, because screenshots are cute, but what's the story behind it? How many times are these people even having quality entries, right? Are these just people who are getting lucky? Are these trades over leveraged? Can these actions be repeated? These are things that you need to know. That's why I market it the way I do. I market trading the way I market it. You know what? I wasn't even going to go to my Instagram, but I'm going to do it now. So these are the things that I like to post about. I like to post real stuff. So real people with real results, right? Actual conversations that I've had, real stuff. This is the person that I was talking about. Made $6,700 on gold yesterday. Closed out his trades. And I'm one of the reasons that he's able to get that done now. If you notice, see that little icon right there? If I go down, these are all testimonials. Keep scrolling, keep scrolling. Yes, you see my face a lot on my Instagram. Keep scrolling. All right, we're now at the coronavirus times. All right, there's him again. All right, I think that's him as well. Yep, see that little icon? See those numbers? 7,000, 8,000. It ended up being like 40 grand or something like that. Okay, and you'll notice that I'll bring people back that were with me 2 years ago, a year ago. I mean, I just had one of my students from 4 years ago got funded by a funding company, and he's now going to be rocking I think a $50,000 or a $70,000 trading account. That is real skill. I'm not there over their shoulder. Hey man, what are you doing today? No, they reach back to me because they're having new levels of achievement. They're still doing what they're doing. It's called gratitude. That is how I run my business. I run my business hoping that people, when they find what they're looking for, which is some sort of consistency or positive steps forward, you know, they share that with me. That way they know I can grow my platform. Things like this. All right. I appreciate comments like that. I appreciate the positive feedback. But also I use it as a point to you guys. I don't deal in the realm of luck. So when I'm giving you information, I'm giving you information because I know that it's real and it's something that you could repeat and something that you could hold on to and maybe do more research upon. You can dissect. I leave all this stuff up there for you to pick apart. I don't care. All right? Go ahead. Do what you got to do. I got nothing to hide. All right? And that's it. So we're going to get into some of the same stuff that I've taught people at the beginning of their careers. Knowing what things are and what they mean is important. But seeing how they can be applied and how you can use them to better your trading, that's important as well. So what we're going to focus on in this series is some of this chart stuff. We may repeat a little bit of the things that we spoke about in the earlier series that I posted before this one. we're going to get into, let me see these notes here real quick. Some of the more common questions, the difference between fundamental and technical analysis. That's going to be talked about. It's really not that big of a topic. We're going to talk support and resistance, how to spot a trend, easy ways to spot a trend. We're going to talk about some of the misconceptions about trend trading. We're also going to talk about consolidation. We're going to talk about the stages of trading and some other stuff. I'm going to also use some of the things that you guys have sent me to explain. Use these same things that you can get for free on Instagram and break them down for you. Now, I got a lot of questions last week when I posted the first part of this series. Why are you doing this? Okay, and I said it in the series, so it kind of pisses me off when people ask me. But I think I'm going to take that same question and kind of change it up a bit. Okay, the question that I was getting is, why are you giving out real information for free when you have a paid group? Because the secret to trading is not in knowing what something means. Okay, it's not in knowing what technical analysis is or fundamental analysis or pips. First of all, there is no secrets. There's just experience, like I just said, and you need to be around people who know what the fuck they're doing. When you're around people who make it seem good and make it seem nice, but there's no consistency in their approach, something's wrong there. Okay, and above all else, what I teach and what I charge for is my time. Right now, I'm giving away my time for free, but honestly, it's just good business what I'm doing. It's also good human shit, right? I'm trying to help people, so I'm trying to make a difference. You know, I know not everybody's going to become a Pipsology FX member or one-on-one student. I know not everybody can afford my one-on-one coaching, which is why I brought the group upon the internet, right? That's why I started that group 3 years ago, because not everyone could afford my coaching. All right, it's just the truth. My price goes up all the time. As time goes on, I'm longer in the game. I'm gonna get more expensive. That's just the way it goes until eventually I'll be at elite prices. That's just the way it's gonna be. But my group will always be affordable. I made myself that promise. And then there's this free resources for the people who can't even afford that. So I'm doing my part. Now here's the separation though. I'm not gonna give you the years and years of experience between my own trading and teaching other people for free. I'm not going to do that. What I'm giving you is the preliminary stuff, the stuff that you need to know, the stuff that's going to take you one step further into your journey. I am going to throw a couple of saucy things in here, you know, things with that extra seasoning on it. I am going to throw you some things to help you out. I'm going to also tell you some things you should go out there and research on your own if you want to do. And that's it. All right, so we're going to start the video there. If you think that I'm just giving you flimsy info because it's free, I don't roll that way. I wouldn't waste hours of my time making BS info. It just makes no sense. For that, I'll continue doing things the way I've always done them, which is on Instagram, through Instagram stories and Instagram posts, and that's that, right? And if you don't learn that way, or my YouTube, you don't learn that way, you don't learn that way. But no, of course, I'm going to give you real info. This would be a total waste of time if I wasn't. Who the hell would make a group, put a couple of hundred people in here, and then feed them all bullshit? What's the point of that? It serves no purpose. It doesn't get you anywhere. It won't even make you think twice about joining my group, because if I'm giving you BS info, what's the point? You know, it serves no purpose. So yes, I am giving you real stuff. I know that people are jaded because of what's out there, because every time that you join a Learn for Free group, they give you 30 minutes of material and then a paywall for you to get into their network marketing company or their scam, their flipping scam, or whatever educational platform they're on. That's not how I roll. Just in case you didn't watch the first couple of videos, hi, my name is Gustavo, and I really don't give a fuck if you join or not. It's not for me, right? You join my group for you. You take one-on-one coaching for you. I just do what I do, no matter what. And I think a lot of people really misunderstand the power of trading. When you have an online business, that is a cherry on top. That's the extra. That's not the main. That's not the main concern there. The main concern is always and forever going to be the trading, and I'll leave it at that. All right, so let's begin. We are about to dive into what the charts are. All right, so that's called technical analysis. But before we get into that, let's talk about something else. When you are trading, there are only so many weapons that you have available to you. Only so many things that you can do as far as breaking down those charts and making it easier for yourself to break all that down. Okay? So the first type is fundamental. Fundamental trading. And that pretty much is that pretty much is this, okay? Using a news calendar, an economic calendar to break and the news releases to break down the long-term approach to the market. Now, like I said in the beginning of this video, there's fundamental and there's technical analysis. There's two types, two main types, the ones accessible to you. Fundamental, using news and also its longer term understanding to measure out like the value of that currency, whether it's going to appreciate, go up, or depreciate, go down, whether you feel it's going to go long, go up, or go short, go down, whether you're going to feel it's going to go bullish, go up, or bearish, go down. It's the same thing, right? You just want to throw those terms at you because people try to confuse you with terminology. So when you're doing fundamental analysis, you know, for example, let's just say Gustavo, the governor, the governor of New York, said that, you know, the government has been poisoning the water in all of New York. Let's say that's what happened. What's going to happen to the dollar there? It's going to tank because there's something wrong in the United States that is of critical importance, and it's a bad look for this country, right? If we find out that the government has been poisoning the water in this country. Now, what you don't understand about fundamental news is that by the time that we find shit out, news, they already know. Who's they? Banks, major trading institutions, all that good stuff. They already know. The politicians themselves, big businesses, trust me that they know. There's only one way for us to be able to tell how news should release, and even then we are surprised all the time, and that's called technical analysis. So fundamental analysis is using these economic calendars to be able to decipher the mood and the sentiment of that currency just a little bit better. Technical analysis, you can also do the same thing long term, but it's more meant for that day-to-day, week-to-week, month-to-month activity. When we're talking, let's say, for example, fundamentals. Take the coronavirus, for example. The market freaking tanked. The dollar tanked. The euro tanked, the GBP tanked, everything tanked because the world was in total dire straits. We thought in the month of April that the world was going to implode upon itself, okay? And then it had some recovery because we found out that, you know, things were a little overblown, and it is what it is, okay? You got to be very careful because everyone wants to be a CNN, Bloomberg TV analyst. They want to be the next Anderson Cooper or whoever the hell these people are. And they want to be able to throw numbers and economic and GDP this and NFP this and that. And they want to sound smart. I'll tell you right now, you know how I learned fundamental analysis? Through my years of experience of just seeing those calendars play out and finding out which ones were important. That's just an experience thing. I never took a course in fundamental analysis. I never focused on learning it. I got pretty good at just knowing who tells the truth and who lies in this game. That's pretty much it. So what did I focus on? My main focus through the years of me doing this and teaching other people has been technical analysis. Now let's get to that. Okay, technical analysis. We are here. The charts. A lot of you have seen these same charts with the black background, green candles, green or red candles. Look, I play around with the colors, right? I change the colors to what I like. You could change these backgrounds and these candles to anything. But what you see in front of you is exactly just that. What you're seeing is candle work, okay? Candles. Now, we need to break down some things here. All right, so these candles are basically the sentiment of the market at a given time. Now, in previous videos, we talked about something up here. Time frames, monthly, weekly, daily, H4, H1, 30-minute, 15-minute, 5-minute, 1 minute. On TradingView, the other program that we've talked about, you can do custom times if you're paying for it. But for a free program, MetaTrader 4, you got more than enough stuff here, okay? You got to ask yourself, why would they give you time frames, okay? You got to remember, what we're doing when we're looking at these candles is we're looking at the sentiment of the market in a given time. Basically, who's buying, who's selling, and who's winning. When you're looking at a chart, you are looking at the battle between buyers versus sellers. The difference between us and stocks is that we can profit whether bearish or bullish, whether long or short, whether up or down. It's depending on whether or not we click the right button. If that market goes down, then we need to know that we figure that out, right? It's ready to go down, or it's already calmed down a little bit, but it should have more to go, and we feel like selling, then we will make profit. And if it ends up going up and we sold, then we will get smacked in the face by the market. That's just the way it goes. So what weapons do we have to improve our accuracy and be able to actually analyze a chart and make sense of it? And the answer is right here. These are your main weapons. These candles, these lines, these rectangles, the way you enter the market, those orders, buying, selling, how much you leverage, the time that you get in. These are your only weapons versus that market. You are basically a small little baby fish in shark-infested waters, and you need to know that as of today. Me, I'm just a slightly bigger fish, but when that freaking shark comes by, I'm going to get ripped apart and my head cut off just like you if I'm not paying attention, okay? So make sure that you understand that you need to always be aware of what's going on these candles. What I'm going to do is I'm going to start working through some of these basics on your screen. Now, I'm also, I think I said it earlier in the video, going to use some of the stuff that you guys have sent me and break it down to you on what it is and how you can apply it to your chart. All right, so let's get into it. Okay, first thing we got to begin with. I opened up a fresh chart, GBP USD, and I opened it up on the daily. Now, by the way, if you go and you start a brand new MetaTrader 4 and you're not going to have this. This is a custom indicator that I give my students, and I also use it to make it easier to understand where I'm at if you're using a mobile. So basically, right now we're looking at a daily. Now you have to ask yourself, why the hell would these people give us a monthly all the way down to a minute? Which one is important? Which one is not? Which one should I use? Now, personally, I always recommend going higher frame first. Now you need to know a couple of things here, all right? And you need to write this stuff down. Your monthly, your weekly, your daily, and your H4, in my mind, are considered higher frames. And they're also considered way more important than the hourly, the 30-minute, the 15-minute, the 5-minute, and the minute chart. You got to think of it from the perspective of an investor always. Now, I'm giving you some sauce here because some of the most boneheaded people just couldn't understand this until they got in front of me and a computer. You got to think of it this way. If you were going to invest your money in something, where would you get your information for that investment? Let's say you wanted to invest into a franchise. All right, you want to invest into Gustavo's Shrimp Shack and Lobster Rolls. I don't know why I chose that, but that's what I chose. Gustavo's Shrimp Shack and Lobster Rolls is now franchised. What are you going to do in order for you to decide whether or not you want to give Gustavo $125,000 for franchising rights? You're going to do your due diligence, right? You're going to go and they're going to give you a package of all the fucking franchises that have been opened up for Gustavo's Shrimp Shack and Lobster Rolls, okay? And you're going to see how those stores have done, where they've done well, find similarities in what those stores have that other stores may not. Maybe look at the way it was managed, maybe look at the menu they chose or the signage they chose or where they chose to guesstimate the foot traffic for that business, how much the property costs, where it's located, west, midwest, you know, on the East Coast, whatever. All these things you need to know. What does that mean? What are you actually doing there? You're looking at historic data, right? You're looking at the significant key points to you in the history of the franchises, of the franchises and the outcomes of all of them, okay? You're taking a whole view of everything that's happened with this business in order to decide whether or not you should be investing your money in this business. Now, imagine if there was a double-sided opportunity here. Imagine if Gustavo's Shrimp Shack and Lobster Rolls came up to you and said, hey, want to make some money? Guess whether or not we're going to become a more valuable business next year, or guess whether or not we're going to shit the bed next year and just tank totally and disappear, right? Imagine you could make money on both sides. What would you do there? You would look at the whole fucking business and you would assess the whole thing, right? From beginning to end to be able to see what the flow of this business is doing and what you think it's going to be doing coming up. Now, let's change it. Let's stop talking about shrimp and lobster rolls and start talking about currency. When we're looking, let's go back to the charts. When we're looking at these charts, what we're looking at is all the franchises and all the activity over this much time. How much time? Well, from the 27th of July 2019 all the way to right now, August 2020. Now, we're looking at it on a daily chart. You may ask why. Write this down. The higher the frame, the more clear, clean, and organized the information. Okay? This is why most people gravitate towards a higher frame. One, you see way more of the history of the market. Exhibit A, we go to a monthly. Now, I'm seeing all the way to 1990 something. All right? Let's do something here. I'm going to highlight these two candles right here, this month and last month. Just like that. I gave it a highlight, a gold highlight. You'll notice that on the monthly chart, what do you got? You got one green bar, aka a candle. You have a candle, a whole engulfing huge candle. And that candle is just one. And it looks pretty insignificant in comparison to the rest of this. Remember last videos I showed you how to measure? Well, guess what, ladies and gentlemen? This candle is 760 pips of sexiness. That is a huge move. But in comparison to decades of movement, not that big of a deal. Okay? Trading is perspective. Trading is using the tools that you have access to and using them appropriately for what you're trying to do next. So for someone like me, I'm not worried about the little baby movements in the market, the 10 pips, the 5 pips. I'm not worried about that. Most beginner traders, they gravitate minute, 5 minute, 15 minute, 30 minute. Why? Because every 15 minutes, it's giving me a new piece of information. Every 5 minutes, it's giving me a new piece of information. Every 30 minutes, every hour, it's giving me a brand new candle. Every time the hour hits, it's going to give you a new candle. On this particular chart, every time the month closes on the 30th, 31st, 29th, whatever it is for that month, that's it. It creates a new candle on the next day. That's how it works. So you're going to ask, well, which chart should I use? I still don't fucking know. Give me a fucking answer. I need to know your trading plan. But if I was a beginner and I didn't know shit about shit, and I didn't understand multi-frame analysis, which is what I do and what a lot of people out there do, that's not a secret, right? You use multiple time frames to be able to assess the timing of your next trade. We're going to talk about why in a second. But if I had to make a choice as to what time frames I'm going to use and stick to one or two, I would go H4, H1. That's what I would do. Now, my suggestion to you is after you're done with this little video series here, you go to my YouTube channel, find it, go to my YouTube channel, and there's videos where I show you stuff that we've done in the group and easy things to look for as far as maybe a little bit of support and resistance, some general concepts that should be running through your mind when you're trading. Go find it. Go look at my videos. Hit like, comment. Go do that, okay? Go peruse. Go be a detective. All right, go do that. Go help your learning process. So the answer for the question that I get so much when time frames comes up, well, if you had a choice, which time frames would you use? H4 and H1. That's where I would go. Why? Because the H4 is a candle every 4 hours, and in a given day, I'm only going to get so many candles, and the H1 gives me a better sense of sharpness and timing. There's some holes in that strategy, but for a beginner who doesn't know what the fuck they're doing, and it's more about learning, less about winning at that point, that's a good starting point. For me, right now, I use a monthly, a weekly, a daily, H4, H1. I don't go lower than that anymore. I used to. Back in the day, I used to use a 5 minute and a minute. I stopped. Why? Because I stopped caring about 20 pip moves, and I started caring way more about 100 pip moves, right? 50 pip moves, 80 pip moves, 200 pip moves. Okay, so let's put some stuff into perspective here. Back to the charts. This candle, notice, pretty insignificant. I'm going to lower it a frame. Weekly. Now I can see that it wasn't a one-sided movement. When we go back to that monthly, it looks pretty one-sided. When we go back to that weekly, you got an up you got a down, and then you got an up. So before it went 800 and something pips on the up, it went 500 pips on the down. That's the part that you didn't see. Okay, let's bring it down one further. Daily. Okay, now we have a different story. We have an uptrend that was 700 or so pips, a downtrend that was 300 or so pips, and then another uptrend and a downtrend and an uptrend and a couple of consolidation candles and an uptrend and more consolidation. You get my point here? We bring it down even further. Holy shit, it's starting to fill my whole screen. Okay, we got more waves in the market, aka noise. H1, it doesn't even fit on my freaking screen anymore. I gotta minimize this. Look at this. Look at that. If I go lower, you already know what's gonna happen. Here's the gag or the secret or whatever. The higher frames show you a clean version of everything. What exactly happened for that month or that week. The problem with that is that if you're trying to be sharp, it's really difficult. Now, if your strategy is one that includes a lot of drawdown and it's acceptable to you, aka swing trading, then yeah, you can just gravitate towards a monthly, a weekly, or a daily, and that's it. But that never made sense to me. From day one that I started trading and learning, I did not understand why people would not use the lower frames to increase their sharpness, at least the momentary chance to take a trade, okay? So for me, I focus on that monthly, weekly, but in reality, most of the work is done on the daily H4, H1 for me. Because the weekly is only going to give you a close every week and the monthly is only going to give you a candle every month. That's not enough information to decipher. It's really not that critical. So I like to use multi-time frame analysis. Here's something else I want to throw at you. Let me get rid of this box here. If we look at the H4, let's say we'll notice that on the monthly, that was a all-out bullish candle, right? It was up. Let's say I had the opposite side bias here. Let's say I had the opposite side bias last month. So July, here's July. Look at all these sell opportunities. Now, you got a bunch of sell opportunities there. You got more here. Now, how we pick that apart is not what matters right now. What matters more here is what this is. That is called resistance. We're going to get into one of the core key concepts of trading, something that is a huge part of my trading. What I am really good at is, one, the psychology of trading, and two, my ability to see support and resistance everywhere and anywhere before it even forms. That's called experience. You ask anybody that's ever learned from me or anybody in that group, one of my greatest skills is my ability to foreshadow that market. Where is it going to go before it comes to where I need it to go? Okay? And that skill is just a great understanding of support and resistance. Here's something that's going to be said to you in every single course out there. The trend is your friend. Okay? The trend is your friend. The trend is your friend. The trend is your friend. Before you learn how to trend trade and how to read a trend, which is very confusing for some people, and sometimes it's more perspective than anything, my advice to you is to learn to read support and resistance first. Clean and clear. So I'm going to use one of the things that you guys sent me. Okay, so this is the first thing that I've seen a lot that I felt held some value. And this stuff is totally free. Somebody sent it on Instagram and asked me to break it down because I told you guys, send me questions and I'll use it. So this is what I'm doing. What you're seeing right now is support and resistance levels. Okay? Support and resistance levels. This is important because the market has highs and lows, just like anything else. Cars hit a high, cars hit a devalue low. Homes hit a high, they hit a base low. There's certain numbers that they don't get under, and there's certain numbers that they won't go over without struggle or something extreme happening. The currency market is the same thing. Supply and demand zones are a variation of support and resistance levels. It's basically the same crap. But in this case, only 1 point or candle with high volume is needed to identify a zone. The easiest way to identify one of these zones is by looking at the beginning of a strong rally or a drop. These points often identify a supply or demand zone. Now, this is a very vague explanation, even though they use a lot of words. But basically what they're saying is There's areas in the market where it's great to buy from and areas in the market where it's great to sell from. That's it. That's what they're saying there. And there's also areas, and this goes through every single time frame. You see, hear me on this for a second. This is the secret to time frames. What are you using it for? If I'm looking at a monthly, I'm looking for much bigger movements. Movements that can go through months of time. That's why I'm looking at a monthly. I'm looking for much larger reactions in the month on the charts, which means that I could be waiting months for my next trade because the market has to get to these specific prices in order for me to even start to look for technical analysis to be able to break it down and get in at the right time. If I'm looking at a minute chart, I can't be looking for huge moves on the minute. I got to be looking for 5 pips, 7 pips, little baby movements. Same thing as I scale up, right? If I'm on the hour chart, I'm looking for 20 to 30 pip trades. If I'm on the 4 hour, I'm looking for multi-hour trades, right? Maybe my 50, 60, 70 pips. Daily, you're looking for that 100. Now, I'm ballparking it here, right? But I'm giving you a simple understanding of those time frames. Here's a pitfall that I see every beginner trader fall into. They're looking for 100 pip moves because they see Gustavo and Gustavo's students catching 100 pips on Instagram. They're like, oh man, I want that. I'm going to start holding my trades. And they're getting smacked around in the market. The reason for that is they don't understand the phases of the market. They also don't understand how to use their time frames. So before we continue this conversation with support and resistance and supply and demand, we need to talk about those candles. Candlesticks, okay? This was also sent to me. This is definitely free. Candlesticks. These are the candles. This is what you see on your screen. This is what's in front of you when you are trading. The green ones or the blue ones, depending on what broker you're on, but if it goes up, those are bullish candles, buyer candles. They are telling you that there was buyer activity in this market. When you see it really filled up on that candle, on that particular time frame, it was really bullish. If you see things like this, people call them shadows or wicks, W-I-C-K-S, or shadows, that shows weakness to that side. It's basically saying that the market was at one time at this price point, and then by the time the candle closed, it was down here. What does that tell you? A little bit of seller power came into that trade, into that candle. Here, a lot of bit of seller power. Here, there's a lot of indecision in the market. It's not bullish or bearish here either. So you got your neutral candle, which means nothing, right? And then this is the opposite, right? You got a kind of bearish close, but not really significant, a very less bearish close, and a more bearish close with the full candle. What am I saying here? The larger the candle on those higher frames, remember, know how many pips, especially in comparison to the candles before it, the more information that it's giving you. If I see a very bearish candle and every candle before it is very bearish, guess what I'm not going to do? Buy, right? Because the market at that time has bearish sentiment. I'm not going to fight. Remember, you're a little fish. If you see it very bearish, you should be looking for sell opportunities. You shouldn't be looking for buyer opportunities, okay? So that's pretty much what this little chart setting, all right? Bullish, bearish, full candles, showing you wick activity. The wicks are basically showing you where the market has been within that time frame and what happened after, right? That is information. Those are details. If I see, for example, that this thing was once up here, and then when we close the 4 hour or that daily or that weekly or that month, that's not good, right? That the market had so much rejection at the top. This is amazing. This is not, all right? If I'm a buyer, if I'm a seller, these are good. If I'm a seller, these are good. The rest of this shit is not that great, okay? Also, what matters is what time frame are you looking on? Again, I'm not going to take an hour, a 30-minute and down seriously as much as I'm going to take a 4 hour, a daily, a weekly, a monthly. That information has gone through time, tested market movement. The more history on your side, the better for you. If you learn to maneuver through that higher frame first and then approach that lower frame second and always justify your entries, I'm giving you some information here. Always justify your entries higher frame first. Do not second guess on that lower frame. You will have a better ratio. That's my opinion of it, okay? The next diagram. This diagram is labeled the moods of candlesticks. Okay, so let's go through it. It's the same thing that I was saying. Fear for downside after a strong fall. Shall we pause and go sideways? And then it's showing you, right? The wicks, what it's saying is the market was really bearish and then it created that wick. That's a detail. You need to pay attention to that. It's telling you weakness to the downside. Weakness to the downside. Now, it's also appropriate to remind you guys that basically what time frame, again, matters. If I see that on a 15-minute, it could mean jack shit. If I see it on an hourly, it means jack shit. If I see that on the daily and I'm bearish and I'm trying to be aggressive, I need to stop. I need to stop for a second because I need to see new resistances created in order for me to believe that this thing still has bearish flow. All right? Confusion, not sure about upside or downside, though downside was slightly preferred. I don't know where this person got this, but basically it's the same thing, okay? This candle, let's say it was a daily candle, on this particular day it preferred downside, but there's confusion on both seller side and buyer side, right? We continue. Fear for downside during downward move, possibilities of reversal. You see this right here, right? There is bearishness here, but not a lot of bearish strength was left when that candle closed. Fear for upside during downward move, existing downtrend continuation or existing uptrend reversal. Basically the same shit, okay? This market has the potential of failing to go even lower, okay? And this is the opposite of it. Fear for upside after a strong upward jump. Shall we pause and go sideways? Meaning this thing was really bullish, and then all of a sudden it got all the way to the high, and the rejection is real. These are things you need to know, okay? Basically, I mean, it's a good title for the chart, the mood of the candlesticks. They are deciphering the details. Again, I'm going to repeat to you, minute, 5 minute, 15 minute, 30 minute, hour, not as important as the 4 hour. If you think you're going to be sitting there on a minute chart every 60 seconds, oh my God, wicks, and the fear to the upside, and is it down? You're going to drive yourself fucking insane. Do not do that. That is a beginner's pitfall and why a lot of people quit. They get overwhelmed by all the details they're breaking down. You're breaking down bullshit, right? You're breaking down things that don't matter to you. That doesn't matter. All that matters to you, honestly, is that higher frame. The higher frame perspective is the big boy money perspective, where the money's at. The banks, the institutions, the major trading, that's where they're at. They're not looking at those little baby moves. You want to learn how to be comfortable in the slower time frames. If hyperactivity in the market is what you need, you're going to find yourself losing because you need quality over quantity in this game. You need to understand that the less you trade, the better for you. Okay? And we continue. All right. So this is a different chart. And this one actually has something on it that somebody sent me that I felt it was important. Now, I'll tell you right now, these patterns, extremely common. You could stop the video and watch them. Basically, it's precursors to movements, right? Bullish candlestick patterns, bearish candlestick patterns. I'll be real honest with you, I'm not a pattern guy. I am support and resistance. I am market mechanics. I am what's called order flow. I like to read the sentiment of the market, real simple tactics. I'm more of the psychology of the market, the what's called like the banker's mentality, okay? I think like they think. That's how I approach the market. Can't talk about that here because honestly, this is a free course, just being real. But this is the basis of what we do. And if you don't know this, then what I do means absolutely shit. Because if you don't understand what I'm saying, if you get stuck on terminology, then you're wasting your time. So out of this, what is important to me? Well, I mean, if I had to look for any, it would be this one for bearish. And why? Because it's breaking the old low, right? So bearish. This one for bullish. Why? Because it's breaking the old high, right? This was once a resistance area. That's the break. What else do I really like? The bullish engulfing, right? This right here where the market engulfs previous market condition. So here engulfs that. Bearish engulfing. The market was bullish at one time, and then the next candle is really, really bearish. That's saying something to you. It's saying that the market has lost its bullish pressure and it is now bearish. Your job there is to find where the new high is to then work off that high. Now, I know I'm getting ahead of myself here, but I'm just breaking this down, and trust me that this will come up again. If it doesn't come up here, it'll come up on another video. And then the other ones that I would go with if I had to really pay attention. So far we have 3 white soldiers, 3 black crows, which is a horrendous name for a pattern. Literally what it is just continuation. Bearish engulfing, that is literally the market just engulfs previous movements through one candle. Side note, they're not talking again. I hope this has been made clear. We're not talking about a 5 minute, a 30 minute, an hour, or even a 4 hour on this. We're talking about daily, right? We're talking about weekly. We're talking about monthly. You see stuff like that on the daily, pay attention, right? Weekly, pay a lot of attention, all right? This one, shooting star, that's total weakness to the upside. There's that wick again. We just spoke about that in the previous charts. That wick is saying, hey, we were up here at one time, but we must have engaged a lot of bearishness because bang, bearish close, bearish. And on the opposite side, this one. Okay? The hammer. And that's that. Neutral candlesticks, no sentiment in the market. Really no sentiment in the market. Okay? That's that. And this one, bullish candlestick, bearish candlestick. And this is just important simply because you want to know what the candle means, okay? So you're going to see something here. We see a wick, and we see what's called the body of the market, okay? Now on here they call it a shadow. Here's what you need to know. The market opened up, this candle opened up here. The low of the candle is here. The high of the candle is here. That means during this time, this market went here, hit down here, worked its way all the way to up here, and then closed right here. That's what that's saying. Let's go through it one more time. The market opened up here, right? It says opening here. You would know that because it's the base of the body. The lowest this candle went through this particular time. So let's say it's a day. Today, this market opened up here. It got all the way down to here. It created this wick, worked its way up, created this high, came back down, closed here, which finalizes this candle. Open, close, my high, my low, my wicks. Okay? On this one, this is my high, this is my low. The opening at the top, the close at the bottom. All right? And the body is this right here. Pretty self-explanatory. Why is that important to you? It's important to you because if the market opens up, let's say at price 1,000, all right, gets all the way down to price 900, I'm just throwing numbers at you, works its way all the way up. You know, at that time, if the price opened at price 1,000 and then was at price 900, what does it look like? It looks bearish. It went down, right? And then the market works itself all the way up to price 2,000 and then comes down to price 1,700, whatever, and that's where it closes. What does that tell you? It tells you that the market has sensitivity and wants to get to down here and here and here. You got 3 spots you need to worry about. The candles will work that out for you, but this is just a preliminary understanding of how candles open, how candles close. Also, it's telling you something, man. There's market movement within the candle. The candles are moving. And here's something you need to write down or tattoo on your forearm. The candle is not official until it fucking closes. So whatever time frame that you're on, don't react to, oh my God, it's going down. That's called chasing the market. See, on this candle, they're telling you it opened here and it got down to here. What does that tell you? It tells you that at one time it may have looked bearish, which means that if you're paying attention to it, you're like, oh my God, it's going down. By the time it was all said and done and that candle closed, you were up here. You're fucked if you took that sell. You're fucked at that time. And you're hoping that your next candle looks like this one, right? But if you wait for it to close, you know it's not a good time to sell because it closed bullishly. Catch my drift? A candle is not official until it closes on that time frame. So 4 hour, every 4 hour, hourly every hour, daily every day, monthly every month. Okay? And that is this diagram or whatever the fuck screenshot in a nutshell. All right? We move on.